Hi, I'm Darren Townsend. I head up the Vanadium Recovery business unit at Neometals. Neometals is a sustainable producer of battery metals listed on the ASX. I'm happy to talk to you today about the Vanadium Recovery project.
And now I partner with Glencore. Saw the news, little bit old now, over a week old. But if you don't mind, can you kind of run us through sort of the general terms of that deal?
Yeah, sure. So really, Neometals, Chris in particular, has had a long relationship with Glencore. They were known to us from back in the early days with our Barrambie project. So we've had kept a long-standing sort of relationship with them. When we got early involved with the financing of the Vanadium Recovery project, it became very clear to us from talking to our Ventum partners, our debt advisory group, that we had to make sure that we remove the volume risk for the banks for the debt financing aspects of the project. So that was a key requirement, and we've been able to achieve that with this take-or-pay agreement with Glencore.
Right, okay, so let's be clear. Glencore haven't chucked a bunch of money at you. It's a pure off-take agreement. You're going to have conversations with banks, lenders, debt and equity off the back of this. But it's not bad at all. Can you tell us much about the deal? These things tend to be quite secretive in terms of the precise details, but what can you tell us?
Yeah, a lot of the stuff is commercial in confidence, but it's for 100% of the volume. It's for a 5-year period of time with an ability to extend by mutual agreement for 2-year additional increments. So it really hits the sweet spot in terms of what the banks need for covering the tenor of the debt. So I really got all of that locked away now. So this really underpins the debt process, which is well advanced. It's any vanadium that we produce, whether that be ferrovanadium or high purity vanadium pentoxide. As you know, our sort of sweet spot here is we're going to be producing super high purity, the carbon zero or carbon negative vanadium. So super attractive for some of the high purity applications around the world, things like vanadium redox flow batteries and other chemicals. So really well suited for the market.
Okay, so and we'll make some sort of general statements where we kind of get into it. I want to see is because of the quality of the counterparty, Glencore, that you'll be able to negotiate better terms, and certainly in terms of the debt component. Should we take that as read? We don't need to go into it.
Yeah, but Glencore are the largest vanadium trader on the planet. So it's a tier one counterparty on steroids, if you like, in the vanadium market. So
exactly, everything the banks want to hear. Well, let's talk about moving things forward. So obviously, you're going to go and have those conversations, and you'll be drawing down money. We'll call it broadly money to be able to kind of advance the project. So where are we today? What's the kind of timeline through to production and being able to actually, execute the offtake agreement?
Yeah, so really with this Glencore offtake, it really underpins the conclusion or finalisation of the debt piece. That's in really, really good shape. We've been working hard with our advisors, Ventum partners. We've had site visits and due diligence and things, up to our necks in terms of the process. So we've been going pretty hard on that for a couple of months now. We've previously sort of announced the European Investment Bank are really taking the lead on the debt syndicate. We're in the final sort of phases of putting together all of their information to go through to their board. Their board will meet in September, and we're hopeful of getting a positive outcome from that.
Right, and that's on the money side of things. And one, I guess, people looking in and go, well, given all of the people involved, one will assume that should be positive. It's just a question of the cost of that. Back to the question on timing, where are you today with things, and how much more work is needed to be done before you get into production?
Yeah, so as you can imagine, for a sort of circular economy, carbon negative project like ours, producing a critical metal inside of the EU, we're going to get very favourable debt terms that we expect to see coming through from the European Investment Bank. Progressing well, but I'm feeling very comfortable about the debt side of it. We're looking at doing a 60% debt, 40% equity sort of split, And so debt's well in hand, well under control, advancing very nicely. Now's the time to turn our mind to the equity piece. So I think a very important thing to sort of start off with this is I think Neometals has shown a track record of being able to innovatively finance things, not necessarily through dilution of the headco. So I just wanted to lead off with that. There's a few levers we've got to play with how we might finance this in a non-dilutive way at the Neometals level, and that's what we're actively pursuing. So whether that's sort of sell down at a project level, equity, we've got holding companies that between us and the project co that have royalty streams coming to them. There's some innovative ways we might be able to finance for those. So they're the type of non-dilutive equity type structures we're looking at the moment, really focused on that.
Right. And what about on the grounds? Where are you at? And, and how much more work is required operationally?
No, we've basically got all of our feasibility study all complete, and that's really underpinned all the due diligence for the banks and on the equity side. So that's all well in place. We've sort of very close to selecting our EPCM engineer going forward. So really we're now at a stage where we're going to be looking to have all the financing in place by the end of September, with the view to launching straight into the EPCM contract off the back of that. There is some engineering works that we're doing at the moment. The way we're sort of doing the engineering is we've got Metso, who is a very well-known Scandinavian firm, really basically taking care of the front half of the plant. So they're doing a bit of additional basic engineering and things to feed into the EPCM. And then we've got a group called Jord Proxer Dry Tech who will do the back end of the plant. They're well experienced in building vanadium circuits. Really using top quality groups to help us with the project. And obviously Glencore, with their deep operating experience from Rovan, will be able to give us a bit of advice on the back end of the process as well. So we're in really good shape with the vendors we're looking to use. The counterparties are all tier one across the board, and looking forward to getting it done by the end of September.
Okay, and I guess in a very meaningful way, you kind of don't care what the market's doing, or is it? Well, okay, you're not going to answer that question because there'll be a question. The economics will be factored in according to some kind of structure which you've agreed with Glencore. But with the offtake agreement, 5 year with then a kind of two year rolling thereafter. You're just focused on getting this stuff out of the ground. The fact that you are a bottom quartile cost producer is going to be advantageous to you. Are you sort of looking at other expansive projects? I know you've done the feasibility on this project, but are you looking at other expansive or scaling projects right now, or is it just a case get this thing out the door and then worry about growth later?
Most of the focus has really been getting on this one, sort of engineering complete and getting the financing package together. We've obviously had some thoughts about other sort of opportunities, around the world and around the Nordics and Europe. We will really start to crank up the efforts in if you like, the second phase of opportunities for the technology as we move forward. But to be perfectly frank, we've really been so busy on the first one that we haven't done enough work yet. But we've got some pretty good ideas on where the alternative feedstocks are. With this, you can actually transport slag, around the world. Obviously, we've got a lot of carbon footprints, appropriate to that. But yeah, there is some opportunity to look at, expanding opportunities around the world. We've obviously also got the H2 green steel deal as well, which is another potential follow-on opportunity, which is already in the Nordics and identified. But yeah, lots more work to do in that area, Matt.
But tell me this, because I appreciate there's some stuff you can say, some stuff you can't, in terms of deal structure, etc. But the economics are going to be really important here. It's tough year in the markets for all equities. And you're also, there's a backdrop with you saying, well, we need to try and work out some non-dilutory type solution on the equity, so that the rest of the company isn't affected. Kind of separation of church and state, as it were. But how important is this project to the rest of the group? I mean, perhaps if you remind me of some of the feasibility numbers in terms of the economics, that would help, because this thing should be throwing off cash quite soon.
Yeah, no, that's right. So just a reminder, we own 72.5% of the project with our joint venture partners, Critical Metals. So that's the current ownership structure. So all the numbers I'll give to you now are on a 100% basis, just for simplicity. And these were results that we published earlier in the year. But yeah, it's an NPV 10 pre-tax of about US $323 billion, internal rate of return to about 24.8% pre-tax as well. So, pretty handy numbers. I mean, the beauty about this, it's sitting in an unlisted joint venture sort of company. So we really are able to have discussions around NPV numbers, rather than worrying about, how much of Neometals market cap is currently represented by the opportunity. So that makes the conversation a lot easier. And that's the nature of how we've been focusing those sort of valuation discussions.
Right. Okay. And I know you don't want to, or you can't talk about, how this component, the vanadium component, is valued in relation to what's going on in the rest of the company. But, if I look at the vanadium part, it's not valued not far off what the rest of the company's being valued at the moment. So there's a kind of sort of disconnect between what you guys are being busy doing with the various projects, but various green projects across Europe, and the value of the whole company. How are you guys feeling about that? I mean,
yeah, I mean, it's a little annoying, to be perfectly frank. It's a little annoying, but as we sort of close out these, like the financing for this particular opportunity, that's really then going to put a peg under the valuation of this part of the company. I mean, to be perfectly frank, our company is really more valued by and far on the lithium battery recycling story, and that's where most of investors' focus is. So I think when we get this finalised and done, obviously subject to closings and various hoops that we've still got to jump through, but that'll really allow a valuation metric to be put onto this particular part of the business. And I think that'll be very helpful.
Right. Okay. And so let's say you got the money tomorrow. What's the timeline through to production? How quickly does this thing, when you've got all the money, get into production?
Yeah, so we'd be looking at starting work this side of Christmas on the ground in terms of getting the stockpile areas ready for receiving the slag. We'll have first slag coming before the end of this calendar year, and then main construction on the plant itself starts next year, and then looking at commissioning in the sort of second half of 25 for steady state production in the first half of 2026. So this is real and happening. There's a lot of engineering already being done on all the stockpiles in terms of all the pads and the liners and everything we need. As everyone's aware, we've got our environmental permit already. So really hot to trot and get stuck into it.
Okay. Well, look, Darren, I appreciate you coming on and telling us about it. I just want to kind of, have a chat, sort of see how you're getting on, but mostly try and understand the time frame through to, quite frankly, producing cash. So we're looking about 2.5 years out from today as you're planning it, and hopefully some kind of revaluation soon when people understand if you're able to, when you've got the financing in place. Yeah?
Yeah, I think that's a good summary, Matt.
Okay, mate. Good to see you. Stay in touch, okay?
Thanks, Matt. Good to talk. Cheers.